Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the line with us today is a new guest to the program. His name is John Anderson, and he's the chairman of Triumph Gold. John, welcome to the program.
Thank you, Colin. Really appreciate you taking the time to interview us.
I think it'd be good to start with a little bit of a background on yourself. You've been around the industry for quite some time, and you're very familiar with how the Canadian markets work, and as a subsector, the resource sector.
Yeah, I got into this business. I have a financing background, institutionally based, and I got into the resource game in 1996 with a company called BMO Gold, coming in via finance and investor relations, and it was quite a time in 1996 with the whole Bre-X and Diamond Fields discoveries, and a lot of attention brought into the junior market. So it was quite a fast learning experience into the industry, and I've obviously leveraged off of that since then.
To set the context for the call, I want to talk about Triumph Gold today, and Triumph Gold is very interesting for our listeners because it's a real lesson in the ebbs and flows of the market. You have this massive 6 million ounce, relatively low-grade deposit up in the Yukon that went from a very substantial market cap back in the last cycle to less than $3 million market cap as of January of last year. And that's when John reached out to Sean and myself at Palisade Global with an opportunity to invest in and recapitalize the company at the time. And John, before we go any further, I want you to go over the history of Triumph Gold, which was called Northern Freegold at the time.
Sure. I became an investor into the company's IPO in 2006, and why I was interested in the project originally was that it was a district-sized project that had infrastructure. And back in 2006, Northern Freegold at the time, it was one of the only junior companies that was new and fresh in the Yukon after the Yukon government got control of its natural resources from the federal government in 2003. Because from 1990 till 2003, there was not a lot of exploration or development work in the resource side. So you missed that most exciting, most dynamic period of exploration in the 90s, early 2000s, because of geopolitical reasons and lack of new technology being deployed into that area at that time. So Northern Freegold really presented an opportunity as an investor, which I was at the time, and had my old gold fund, as a strategic investment, and it turned out to be worthwhile from our standpoint as far as picking the project and picking the timing. Unfortunately, with the resource market that fell apart afterwards, Northern Freegold was one of the victims.
Certainly, and I think it's worth focusing on a little bit just the call option aspect of Triumph Gold, in that you do have this huge low-grade component, and that is partially responsible for why the stock can move so violently when the price of gold goes from $1,900 down to where it bottomed out around $1,080 and now back at $1,300.
Yeah, it is an optionality play, and I've been involved in one before. I was just an investor in this, and when we've seen the market correct as rapidly and quickly as it did in 2011, 2012, we knew the asset, and it was a primary, we'll call it a call on gold, where, again, as you mentioned, it was a low grade porphyry. But there's a lot of other assets to the project that I don't think the market understands. In 2012, 2013, the company did a preliminary economic study, and it was based on gold prices actually that are standing around where they are right now. I can't talk about that because it's irrelevant at that stage, but it was fairly positive at that time. And the focus was just on taking the resource that they had defined at that period and putting economic parameters on it. My approach is a lot different. We know we've got that 3 million ounce gold deposit. We've got the 280 million pound associated with it. We've also got some high grade deposits. We knew we had that, but we barely scratched the surface as far as the exploration potential. So we knew we had that. We knew the the asset was worth much more than what the market cap was at the time. That's why in 2015 I got behind it with another institution. I looked for some co-investors that had a strategic, longer-term outlook, like yourselves, and I did reach out to you and Sean, and it's worked out fortuitously for all of us, because we've attracted a lot more investors. But this is a leverage call on gold and even copper for that matter.
John, it's certainly a different market today than what we had several years ago, where drilling was done for low-grade ounces, particularly on this project, and the idea was to just build up as many ounces as possible. Today, with slightly lower gold prices than we had, there's more of a focus on creating value ounces, or ounces that are in the money today. Rick Rule talks about optionality plays as companies that have a massive low-grade deposit, but management that does not overpay itself and does not work the project until that work is merited. And an interesting development that just came up a couple months ago is bringing Goldcorp into the fold. And Goldcorp obviously sees something here other than just the low-grade deposit, because they put some money up that's going to be used towards quite a bit of drilling coming up. Can you talk about that focus?
Yeah, sure. We've got a very large surface deposit, low grade optionality. No, let's not pretend that it's economic really at these market prices. So on the optionality, to go out and drill those holes and expand the size of that deposit, as Rick Rule would say, I agree with him. If you're not going to get value in the marketplace for it, why spend the money to do it? So last year, we didn't spend any money on drilling. We decided to take the $35 million of drilling that had been done on the property and spent about $100,000 and data mined what was there. And we've come up with 4 new discoveries that we want to target this year. That's irrespective of the fact Goldcorp did come in just a couple of weeks ago after analyzing what we have, and not just the geology, but the team we've subsequently put together and the geography. Goldcorp paid $520 million for its purchase of Kaminak, just up the road from us. We have a property just southeast of where they are, but we have incredible infrastructure, and I really have to stress the importance of the infrastructure that we have. We have a property that's 200 square kilometers, 35 kilometers from one end to the other. And one thing that really is important when you're doing your exploration is your cost. And if you've got infrastructure like we have, where we've got a government-maintained road right through the property, we got a cost advantage from drilling, for infrastructure, logistics, ahead of anyone else in the Yukon. And I think that's one of the things that they also see.
John, I'd like to talk a little bit about dealing with a major. I think a lot of listeners will find that interesting, just how you go about that. And I don't know how much you can share without overstepping bounds in regards to your relationship with Goldcorp, but just maybe talk about what they were looking for. They obviously did make that purchase of Kaminak, and their investment relative to how much they paid for Kaminak into Triumph is pretty small. So kind of put us in the mindset of a company like Goldcorp and what they're trying to get out of this.
Well, they paid for Kaminak and paid handsomely for it, but they see value in it. They bought that project not just for that project; they bought it for owning a district, and I think they've been showing with their checkbook and their involvement with other juniors in the Yukon that they're committed to that area. One thing that we have that a lot of those other juniors don't have is we're right along that geological structure called the Big Creek Fault Zone that goes right from north of Carmack's right up into their property and into the White Gold District. We've got the infrastructure, but as far as dealing with them, they've been fantastic. It was one of those things where pretty much a two-person company. A year ago, we looked around and said, how do we move this forward? Talked to some of the other majors. And of course, they want to come in on an earn-in basis. Goldcorp listened to what we wanted, and they were so good about it. They responded according to what how we wanted to advance the project, and and acted really quickly. They've been fantastic to work with. They've come in straight equity. One of the things they're relying on is our technical expertise. And in the last year, we hired Paul Reynolds as our president, Tony Barushi as our vice president of exploration, who spent last summer on the project, and the whole team behind that. So that's really what they're also buying into.
Speculating here a bit, but just talking generally, what does it mean for a major when they're buying 19.9% of a company? I mean, there's some component of that that's almost saying if certain milestones are met, this is a project that we want to own 100% of at some point.
Yeah, I think so. That's the intention. However, when they came in on their 19.9%, they made it very clear that nothing is set in stone. They don't have any other rights outside of really maintaining that right to buy more shares if we happen to do more financing. So they don't have a right into the project. You've seen a few of the other majors play in the Yukon, get involved in the Yukon. We look at ATAC, attracted Barrick, and they had Goldstroke, attract Newmont. Those investments are a lot different than ours, where they actually have a direct involvement in the actual asset in the project. With our company, Goldcorp is just an investor in the company. They have no board position. We report more strictly on a technical standpoint at this stage.
John, a major drill program is going to begin in June, and that was funded majority by Goldcorp coming in with the flow-through financing. What can we expect there? And talk to us a bit about the new VP of Exploration you've hired, Tony. People who are familiar with the project are familiar mainly with the low grade of the last decade, but there's some new targets that are of interest. Yeah,
so the project hasn't really had much work on it since 2011, 2012 from a drilling standpoint. It was a victim of the down market. It was difficult for the company at that time to raise money for exploration, and the company at that time had decided to do a pre-feasibility or preliminary economic study based on the fraction of the resource that they knew they had. 2015, 2016 at the bottom of the market, I went to one of the other institutions as well as yourself, and that other institution, Gold 2000, said, "Look, let's look at this differently. Let's not be biased by the work that's been done. Let's look at it with fresh new eyes." So we hired two porphyry experts to look at the property. They immediately told us that there's at least two porphyries on the property, identified with significant drilling, some IP work, soil samples, and fairly large in size. So let's look at the property differently. They recommended Tony Barushi, who is a PhD geologist in the BC Yukon region as his specialty, knows porphyries, but also understands the relationship of high grade and porphyries. And so he spent last summer analyzing all the data and trying to have a better understanding of all the high-grade intercepts that we had on these deposits. And we had significant high-grade intercepts. We had 30 meters of almost half an ounce, 9 meters of a third of an ounce. And why are we throwing that extremely high-grade area into a low-grade model? So that was the data mining and the work that Tony and his team did last summer. He liked the project so much he wanted to join the company. So we immediately hired him after we got an interim financing in November, and he became our VP of Exploration in February of this year. Throughout that period, he'd been working on all the technical data, and with his summer on the property, came up with 4 new exploration ideas that we're going to follow up on and talk to the market about. So it's going to be an exciting time. We're going to do a minimum 12,000 meters of drilling this year. Again, the property hadn't been drilled since 2012, and we know those 3 deposits that we have containing all those ounces are there. We're going to go and try different theories that would only add to what we've got. We're a cheap company. We're an exploration company. We're traded as an exploration company. and we got 3.25 million ounces of gold, and double that if you include the copper.
This is a bit of a selfish interview on Palisade's part in that we are major shareholders at this point in Triumph Gold. In fact, we've purchased over $1 million of shares in the open market in the last year, which is a testament to how discounted we believe the company. And that insider buying has continued even into last week at 45 cents. So the company is now nearly 10 times where it was over a year ago in terms of valuation. But we still feel it's one of the cheapest companies out there per ounce in the market. The market cap's less than $30 million Canadian still. John, I want to ask you, for people just hearing about the story now, what's the next 10x fold look like? How do you get there?
I think the market in general will be re-rating in the next couple of years. But you look at what's happening in the Yukon. Goldcorp came in and bought Kaminak, and as Goldcorp says, it gave the whole territory a Goldcorp bump. We didn't experience that, obviously. It was, fortuitous. I got you involved and a couple other institutions that have been very supportive and have still maintained their share position. And actually added to it, including myself. I bought shares in the open market again last week, and I think you saw that at 42 cents. So I'm pretty excited where we can go. But don't forget, this property, we are traded as an exploration company. We have that significant resource. We also have that infrastructure, and the infrastructure from our property up to where Kaminak's property that Western Copper has to build a road from basically the one end of our property right up to their property is about a $240 million proposition. We've got that infrastructure already. That is a value. But I think really the catalyst is when we get the drills turning starting in June, and I think that'll get people to refocus on the property again.
Great. Well, for our listeners, the company's Triumph Gold ticker symbol on the Toronto Venture Exchange is TIG. And for people interested in buying on the U.S. side, there's actually a pretty nicely traded market. The U.S. market oftentimes trades more shares than Canada, and that's NFRGF, I believe. John, if anybody wants to reach out to you directly to get more information or to the company, how do they do that?
Contact information's on the website, janderson@triumphgoldcorp.com. And if they want to phone me, my mobile is 604-218-7400, and I'm happy to talk to anyone.
Excellent. Thanks so much for coming on the show, John.
Okay. Thank you, Colin, and thank you for your support.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?